Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Yesterday, Commonwealth Bank announced a better-than-expected cash profit of $9.8 billion and a surprise increase to its final dividend. Investors loved it, sending the bank's share price up 1.3%, taking Commonwealth's market capitalisation to almost $223 billion. Now, we have something a little different today. We're working with the team at Ausbiz to bring you interviews with the leaders of some of Australia's biggest companies. Ausbiz is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. If you're interested, sign up at ausbiz.com.au. It's free. Go for it. Yesterday afternoon, David Koch spoke with Commonwealth Bank Chief Executive Matt Comyn. It's a great insight into the strategy behind the bank's results and what the Commonwealth Bank boss says to analysts who think the stock is too expensive.
Matt Comyn, thanks for joining us. What drove today's results? What were the highlights from you?
Well, overall, our profit was slightly down over the full year, down 2%, which was driven, notwithstanding good volume growth across all of our businesses. Margins were a bit lower, which is a sign of the competitive intensity. Like many businesses, our expenses were up due to inflation. But notwithstanding that, we were able to, given the strong position and strong capital holding, we were able to increase the full-year dividend to $4.65, fully franked, which should be good news for the more than 13 million Australians who own the Commonwealth Bank, either directly or indirectly.
Yep, absolutely. Hey, you're the most expensive bank in the world. 23 times earnings, you're valued at, almost double the other big three banks here in Australia. You're valued as a growth stock. Are you stunned by that the market puts you on such a pedestal?
Well, Kochie, we focus obviously on the things that we can control, which is, obviously ultimately our earnings. But even within that, we focus a lot on our customer relationships, doing a great job for our customers every day. And in the context of the full year, how we can both support their growth, but also support our customers where the assistance is needed across 13 million. We've got a business at scale. We're able to make big investments in our technology and our customer experience. One of those that we think is really important in the last year, we've spent $2 billion across our investment portfolio, but more than $800 million in protecting our customers from scams, fraud, financial crime. We've got 4,000 people working to protect our customers and the broader community. We're lucky that we have more than 1 in 3 Australians consider us as their main bank. 1 in 4 businesses consider us as their main bank. So we feel very fortunate to be able to serve so many Australians. We take that obligation really seriously and try to do the best job we can every day. I mean, and it's obviously up to the market in terms of how they reward that, hopefully, stability, consistency, and being able to show improvements on an ongoing basis.
Yep. Of course, you've had lots of briefings since announcing the results this morning, including with all the banking analysts. Were they a bit sheepish? Every banking analyst in the country has had a sell on Commonwealth Bank's shares for the last 9 months. Did you have a chip at them?
No, we didn't. Look, if there's one, they've got a job to do, and we absolutely respect that. I mean, as a company and a big listed company, if an investor or an analyst in this case has a sell, but it's on valuation, it's probably about the best rating that you can have, and it's obviously up to us to be able to continue to deliver and slightly outperform. We beat consensus earnings today. We think a number of the competitive advantages that we have serve us well going into the future. We know from talking to our investors, both large and small, how much they value the stability and the consistency. Obviously, in Australia, given the tax system that you understand well, those fully franked dividends are very valuable. We think that scale, customer base, technology, competitive advantage, and the ability to be able to generate a reliable, fully franked dividend over the long term means the valuation is well supported, both domestically and internationally, and it's up to us to continue to deliver that every day. And the market will value us appropriately over time.
Yep. Let's talk home loans. It's basically the biggest part of your business. Are you stunned at how good a shape your home loan book is in, given the economic environment, the cost of living crisis?
Yes, I mean, there's sort of two sides to that. Obviously, we see clearly every day how many households are finding the circumstances at the moment harder and harder with, just higher prices and inflation. We know that has an effect on everybody, and particularly to lower income. We know that for many of our customers, they certainly feel like they're having to make real sacrifices. They are preferencing to make sure that they're repaying their loans, and particularly from a home lending perspective. So as you mentioned, notwithstanding the arrears, whilst they're up, so that's the proportion of customers who are behind in their repayments, they're up over the year as we expected. They're still against very low historic levels. But we've been really focused on making sure we've, been extremely proactive this year in terms of reaching out to customers and being able to help them provide financial assistance where they need that. A record number of sort of temporary repayment plans to help customers get through some of those difficulties. And that's one of the benefits of being, a large and a very strong financial institution, is we have a lot of resources, in this case financial, to be able to draw upon to support our customers against the broader environment. But of course, unemployment remains very low, and that's the biggest driver of losses in a financial institution. But we're trying to make sure that we're there to help our customers whenever they need us.
Yeah, those customers have hung in so far. How sensitive are they to another interest rate hike or a weakening in the economy? Are they getting towards breaking point?
Well, I think the proportion that are under, real pressure, and you can see that just in terms of, even if they're not behind on their repayments, just where people are choosing to spend, and particularly discretionary spend. I think a lot of households across all age bands are feeling the impact of higher prices. I think we hear consistently that people feel like they've got less left over, they've got less to sort of enjoy on some of the things they would otherwise like to. So, with going through a period of low economic growth, GDP is the lowest in sort of 30 years. It's still positive, but it's much lower growth. As we look forward into 2025 and beyond, we think there'll be a rebound, as does the Reserve Bank, and in household income. And some of that's going to be obviously aided by inflation coming down. So it's definitely a difficult period. I think it's going to be challenging for the rest of the calendar year. I don't see a rapid deterioration, but certainly we expect more and more people just feeling that pressure for longer. It's a difficult time. Yeah. That's reflected certainly, I guess, in sentiment and attitude, and also just our personal experience dealing with customers. And I'm sure you see a lot of that as well.
Yep. Look, 72% of all mortgages in Australia are sold through brokers. At the CBA, 66% of your home loans are direct to customers, only 34% through brokers. Has this been a good strategy for the bank to build that direct link with customers rather than through an intermediary? Helps you monitor the customer, but also improves your margin?
Yes, and look, the broker channel, which has really been growing since the mid-90s, as you know, is an important distribution channel and will remain so for CBA into the future. But as you said, I think like any business, if you can, you'd prefer to have a direct relationship, be dealing directly with customers. We certainly believe there's benefits from our customers' perspective and from ours. We've got a very large, what we call our proprietary lenders, almost 1,800. And so, yes, that's been a real focus for us, and we see it as very much complementary with how do we serve our customers and be their main bank? How do we make sure we provide the best experience, and we also reward and value their loyalty for banking with us?
Yeah. I love your strategies. Explain more about customer acquisition. As you said a bit earlier, 35% of retail bank customers bank with you. The next biggest market share is 16%. But you managed to grab 64% of new migrants and 46% of young adults bank with you. Are they deliberate strategies, and how have you done it?
They definitely are, and look, that's a strategy that we've followed now for many years. And a big driver of that is, in a banking market, the two sources of customer growth, where new customers come from, are people obviously who are born and become young and ultimately adults, or those that move into Australia. And we have different strategies in each of those. I mean, we're very focused on migrants, even though a number of those are, of course, temporary migrants, and that's reflected record levels of migration. Being the biggest financial institution, very well-known brand, the biggest physical distribution, known for having the best digital experience, really helps us. And as you said, it's one of the highest scores we've ever seen in terms of a proportion of migrants who are choosing the Commonwealth Bank to be their main bank. And then, yes, trying to bank Australians who are born here. And we focus very much on youth, and making sure we've got a really good digital proposition in particular is very important. And so it's a continuation of that strategy, as I said, which we believe served the bank very well. And obviously over time we've moved from what was much more of a physical distribution, whereas now complemented, I think equally importantly, by a very strong digital or mobile banking experience.
Yeah, you're very humble with those strategies, because the results are just mind-blowing. To think you've got 46% of young adults who have no loyalty to anybody, let alone a bank, and they bank with CBA is incredible. Just quickly before I let you go, we've talked about home loan customers, small business customers. How are they going at the moment? Are you concerned about them?
I mean, we are, and in the same context as we are across many households. I mean, we're seeing certainly particularly smaller businesses as well, which perhaps have, less operating history, maybe less financial resilience. We see more challenge there, certainly. And then there's some sectors of the economy, you can imagine in the discretionary spend or retail trade, that can be a more challenging set of circumstances. Clearly, there's been labour shortages, problems around sort of pricing in areas like construction and subcontractors through to commercial development. That's obviously critically important in terms of making sure we're building sufficient supply of new housing into the market. So, again, we're certainly there to support our customers. We're not seeing that turn up in credit losses, as you mentioned earlier. But we know that this is a really important time. I think for people, there's a lot of anxiety and uncertainty about exactly what the outlook is on the economy. And, I do definitely think, better times are ahead. But realistically, I know it'll be a challenge for many of our customers for the rest of this year. But most importantly, we're here to help and we're here to serve them.
That was Commonwealth Bank Chief Executive Matt Comyn speaking to David Koch on Ausbiz. Ausbiz is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. Sign up at ausbiz.com.au. It's free. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.